Let's go ahead and speak to another management on results. Sunil Reddy, Managing Director of Dodla Dairy, is joining us now to talk more about the numbers. The numbers are a bit mixed this quarter, but Mr. Reddy, I'm curious to understand from you. We all know how, if the commentary coming from some of the user industries like Jubilant or many others are any guide, all of them are saying cheese prices, other milk products are really eating into their margins. Is it translating to the value-added products for the dairy companies such as yours? Are you able to garner better margins on value-added milk, value-added products, or it is an issue with you as well?
See, for us, I think most of the issue came in with our milk procurement prices becoming higher in the last year because of multiple reasons of lumpy skin disease and other such things. We are being predominantly B2C in the liquid milk and curd and other value-added spaces. We were able to pass on the prices to the customers, but always there will be that time lag from when the price increases to when we pass on the price to the customers. That is why you will see a slight impact on our margins. And but the demand was extremely strong. And now I think this year when milk prices come back to normal levels, we'll see much more of an improvement and it will help our bottom lines.
Levels of mean reversion do you see in your margin? You'll get back to closer to 9-10%?
It will be around those figures, sir, as a forward-looking.
Okay, and when you say there's going to be normalization of milk prices, what do you mean? Are we expecting some sort of decline? Because over the last 2 to 3 years, there was a massive jump. And going forward, what is the volume growth outlook for FY24?
Normally, we've been maintaining a volume of 10 to 12% growth and a value of 15 to 17% growth. I think we'll continue to maintain those volume growths. And because the massive jump in procurement prices, as you've rightly said in the previous years, I think this year they will normalize a bit because the farmers are also getting a better remuneration and production will improve. And that will lead to a little bit of softening of the milk prices.
Milk prices, but the meat really in your earnings comes from the value-added product, right? That's been consistently around that 26-27% mark over the last 4 to 5 years. Are you not looking at increasing that portion by a whole lot?
Yep, see, because we are maintaining the 27-28% mark as the overall pie is increasing and even that pie is going on. I think this year we have done better in terms of other products of the value-added segment. We had a slight drop in terms of our ghee sales as fat because we had a lower fat availability with us as a shortage in the market. And that was there. Otherwise, we would have been improving a little more. So the other segments of value-added products like paneer, ice creams, Indian sweets and ghee and flavored milk and drinking products are going up. But in the overall pie, as we say, I think this is what is the number, maybe another 3-4% improvement over a period of time. But in the consumption of milk, it is predominantly around that 60-40 kind of a ratio as milk and 40 as value-added products.
Mr. Reddy, there was also talk of your company exploring some buyout opportunities as well. Have you closed in on them? The reports suggested that you're looking at parts of Africa for similar opportunities.
Yes, Africa, we have closed one more unit in Kenya where we have already acquired the unit there and we hope that in another 6 months' time that will come into production. And I think Africa operation has done extremely well for us this year. In fact, it grew up both on the volume side as well as the profit side. It grew by 55% in volume.
Just to wrap up the conversation, could you talk to us about what kind of flush season are you expecting in October, November this year? And with respect to the expansion plans in Goa and Maharashtra, what's the update?
In terms of Maharashtra procurement, we have actually been increasing and this year we'll go more aggressively in Maharashtra. Goa, after Sri Krishna acquisition, we have also entered into the Goan market of selling liquid milk. Those are going according to the plans that we're looking at. Regarding the flush season, October, November being more of the buffalo flush, we are already seeing indications in the cow flush season in terms of Maharashtra, parts of Karnataka and parts of Tamil Nadu. It's already, production is increasing, so it's looking very positive for us.
And just before I wrap, I know you hinted about it in your first answer, but the industry has been marred by a lot of issues, right, from diseases, etc. as well. And there were reports that this year, for a change, India might have to import some of the milk products as well. Could you talk to us about how the demand supply is shaping up in the industry?
Actually, that was what the anticipation was based on the last year damage that happened, but I don't think we'll be going to such a scenario of imports. But the prices will be a little firmer on the procurement, not dramatically, because I think not having stocks in the system, whatever surpluses we get, we'll just go to fulfill the stocks again. But we won't need my view, we won't need further imports coming in. We'll have enough of our own procurement.
Okay, sir, on that note, I'll let you go. Thank you so much for joining us today as far as the performance of Dodla Dairy is concerned.